Hi, Jonathan York, Bay Financial Partners, looking at investment markets. As expected, the Fed cut interest rates by a quarter point this morning. So that takes the target rate down to 4% to 4.25 from the Fed. And the indications were that potentially with two more meetings before year end, there'll be a further two cuts. Now, surprisingly, it wasn't a unanimous decision. There was one dissension. That was Stephen Miron, the new Fed appointee, which was appointed by Trump. He wanted a 50 basis point cut. And no real surprise there. He's obviously trying to push Trump's agenda to get rates as low as possible. Now, interesting comments with the cut that, the Fed did acknowledge that, the employment side had really weakened, and that's been shown up in the last couple of data releases. Well, they also pointed as well that inflation is on a little bit of an upward path, and that's, a little bit of a sort of a double-edged sword that the Fed is trying to sort of navigate between low employment and rising inflation. Now, that cut was really pretty much widely expected. So interest rates haven't moved too much. The 10-year is at 4.02. The 2-year is 3.49. That all-important 30-year is at 4.64. Now, what has been noticeable in the US, with rates nudging down as widely anticipated this Fed cut, mortgage activity has really picked up in the last sort of couple of weeks. Now, again, it'll be quite interesting to see how Trump sort of plays this, because while he's been pushing for lower rates, the reason why the rates have been cut is because the economy is weakening. And that's really on the back of his trade policy with, the tariffs, many of those being ruled illegal, and he's got until October the 14th to get that sorted out. But also as well, he lost the case about being able to dismiss Lisa Cook from the Fed. And the strange irony, it's now come to light that Scott Bessent, the Treasury Secretary, had filled out similar sort of claims for his mortgage applications as Lisa Cook. So if there's any consistency, does that mean that Trump is now going to fire Scott Bessent as well? Now, clearly, it's the employment side of the economy that is really worrying the Fed. And despite Trump's claims that manufacturing is coming back to the US, manufacturing has actually fallen by around 40,000 over the last couple of months. And indeed, if you look at the average for the last couple of months, it's running at about plus 45,000 jobs created, when consensus seems to be that you need about 110,000 jobs every month just to keep the US economy moving forward. But again, in a strange sort of irony, both Trump and Howard Lutnick, the Commerce Secretary, have come out and said that the Trump economy won't really start until next year. Now, by that time, Trump will have been in power for over a year. Now, oil has nudged up just a tad here. It's around 63.70 and change. Now, in the UK, Trump's enjoying all the pomp and pageantry of a UK state visit. But again, the UK is facing its own issues because you've got rising inflation, you've got a pretty weak economy, and the Bank of England really needs to be cutting interest rates, but it's very tough when you keep on seeing inflation just nudging up. But potentially they may have to take a leaf out of the Fed's book and cut interest rates really on the back of the weaker employment data. The ECB left rates unchanged, which was really pretty much expected, but we're still expecting at least one further cut before year end. And in France, they've sworn in their 5th PM in the last 2 years. Now, the Australian economy is, it's pushing along at an okay rate, but growth is still a little bit sort of lackluster, sort of targeted to be around sort of 1.7% for the next sort of 12 months. When the cash rate's sitting at 3.6 at present, still expect at least one further cut before year end to take it down to 3.35. Now here in New Zealand, the latest inflation data was again a little bit sort of disappointing, but it's really sort of food inflation that's sort of driving the sort of increases there. Food inflation was up around 5% for the last 12 months. And if you look at sort of dairy, milk, butter, etc., that was up over double digits. But again, with a weak economy, employment, still pretty soft out there. We still expect the Reserve Bank to cut interest rates at its October meeting and potentially also at the November meeting as well. Now, if that is the case, that would take the OCR down to 2.5. And while many thought that was sort of the base, there is some discussion now starting to take place that rates potentially could go lower than that, maybe down to 2%. Because really you've got a bit of a divided economy. Certainly horticultural and the sort of dairy sector is doing very well, but the rest of the economy really is struggling. Although the housing market is starting to show a few signs out there, and certainly activity is starting to pick up, as these rates are sort of falling and mortgage rates are moving lower. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.